being an ex-bad surfer, waves are what matter. And the baby boom was the biggest wave, much larger, 3 times the wave. It's like a 10-foot wave on the beach instead of a 3-foot wave. And a surfer knows the difference. That one will kill you, one of them won't, okay? That big a difference. And so the baby boom was this huge wave. The millennial, after the baby bust from 62 into 76 or so, the millennials came from 1977 on into 2007. That was their boom. It's not as steep. So it is a bigger generation, but they start from higher levels, and we will not see in the United States a boom as extreme as 1983 to 2007. That's what I got. It was in the early to mid 80s, and only small business CEOs would listen to me then, not mainstream economists, not mainstream companies and stuff. I was saying this is going to be the greatest boom in history, just when people think Japan's taking over in East Asia and we're has-beens as the US. I said, we have the best baby boom in the world. Europe's got a strong one too, but we have the best. And Japan is basically going to go down, not take us over, because their baby boom was already peaking in the 90s and has done nothing but go down since. And China's the same today. Everybody's like, well, China's going to take over the world. Well, guess who's got as bad a demographics as Japan on a lag? China and South Korea, all in East Asia. So demographics is destiny, but I also came up with a geopolitical cycle that ebbs and flows, about 18 years positive and 17, 18 negative. And we're in the positive side of that one. But these demographic cycles, there's also a 45-year technology innovation cycle. And that is what kept us going after the 2007 baby boom peak. But that cycle has turned down in the early 2020s here. And that's what all this stimulus is about. First, the demographic cycle turns down 2008 forward. Now the technology cycle peaks in around late 2019, early 2020, right around COVID. And everybody's blaming all this stuff on COVID. No, we would be seeing a natural downturn on this other big technology cycle anyway. So those are the 3 big cycles. I tell people think it's crazy to say this, especially in economics, when nobody thinks you can predict past the next election. I would rather tell you what's going to happen 10, 20, 30, 40 years out in a reasonable range than next year or two, because in politics, a lot of things can change short term, and the long term is already set in stone. Again, people thought US was a has-been, Japan and East Asia were going to take over the world. The opposite happened. We resurged stronger than ever, and Japan was the one that went down. Simple 46, 47-year lag on the birth index was able to predict that. One of the simplest economic indicators in history, and I still can't get mainstream economists to think that's important. They think, oh, monetary policy and fiscal policy, that stuff doesn't change that much. No president changes stuff that much, unless they come into a crisis. And I always love Bill Clinton for saying, I've never had a great enough crisis to go down as the great president, and he didn't. He walked into the 90s, the best decade, better than the roaring 20s, again, because of the baby boom in its prime there, and the technology cycle as well at the same time. That was the best decade in U.S. history. And so, of course, he was popular. He was a good president. But yes, he's not going to go down like Lincoln or Washington or FDR, who managed the Great Depression economy. He's not going to go down as one of the great presidents. He was right about that. I'll tell you who is the next president. I think they tried to blow our way out of this 2008-9 recession with the biggest stimulus program. Again, $27 trillion, 1.5 times our entire GDP over the last many years. That went into 19 trillion, went into massive deficit straight in the economy, and 8 trillion went straight into the financial asset markets, monetary injections. That's what they do. They buy their own treasury bonds, and that adds more money to the pool chasing financial assets. And in addition to the fiscal stimulus, stepping up the economy and trying to make up for the baby bust, this monetary stimulus also increases the valuations on stocks and all financial assets, especially real estate. So that's what we had. We've had what I call a big, fat, fake artificial boom since 2008. And I think now that they overreacted to COVID, they were just keeping this thing going, until they overreacted to COVID, which is a short-term crisis, and nobody's going to blame the economy for that, or economists, or anybody. 11 trillion of this 27 came in 2 years after COVID, okay? That created that 9% inflation when we'd already gotten back down to 1 to 2 and continue going to be low. I mean, I've been forecasting this along with the great boom. I also said inflation will go down to near zero. The productivity of the generation not only creates higher spending, but lower inflation. So all these things predictable, but the government really changed things with this 27 trillion in stimulus. And now we have to see what happens now that they've raised interest rates 525 basis points, biggest since 1981, which caused the biggest downturn since the Great Depression back then. How does this impact the economy? And I'm telling people, hold on, I think in the next 6 months, suddenly this economy is just going to fall apart and nobody's going to know why. You know what I call it? The exhaustion of demand. They just push consumers, lower rates, all these things, stimulus, push them to spend how many times can you trade up to a bigger home? Only once, maybe twice, okay? We're running out of things we can do, and now they've had to tighten from their own excesses, and I think the next few years is going to be what 2020 to 22 should have been, the tail end of a longer downturn and depression like 1930 to 42, which should have happened 2008 to 22, 23. So we blew our way out of we had 2008, 9, and frankly, that should have gone a year longer and been deeper. And then we should have had another downturn, kind of like 1937 to 38 following the Great Depression, 2020 to 22. Then we would have been over this. We would have purged all the bad debts and zombie companies that always come in booms. That's why we have recessions. The biggest mistake economists make, because they've never had and run a business and don't understand reality of the economy, is to think that recessions are the enemy. That's like a doctor telling me, Harry, what are you doing sleeping 6 to 8 hours a week? You're wasting time. Keep working. What's wrong with you? Sleep is as necessary to us staying productive and waking as is recessions, and it's the same ratio, 70% boom, 30% bust over history. And economists are mistakenly trying to annihilate recessions. My motto is, if you don't want to have bad recession, don't have a bubbly, crazy boom. But you have to have recessions and slowdowns and generation cycles. Births go up and down. Technology surge and then peak. They accelerate from 10 to 90% on an S curve, and then they slow down. And then the next ones incubate, and then they surge 10 to 90. So you have S curves of technologies and generational surges in spending all throughout history. I can map those out and tell your kids what the economy is going to look like in 2065 when they're at the top of their spending cycle in life. Today, because it's that predictable, and economists don't think we can predict anything past the next election. And more question, with all this over-stimulus and now over-tightening, what the hell is going to happen in the next year or two and into this election? The problem is that lag. Number one, it's at least a year and a half now. I think the magnitude of stimulus has made a lag. It used to be a year and a half, probably more like a year and a half to two. I mean, when you're talking $27 trillion in stimulus and 11 trillion of it just in the last few years, it takes longer for the economy to digest that. So they've already tightened the most in 40 years, okay? And that's going to hit the most into early to mid next year. We have not felt it yet. People know about the lag, but they don't think about it. They don't put it into print. We're going to feel this the most. We are not going to know how much this stimulus hits until the first quarter of next year. And I think we're going to be in a recession by then, and they're going to do a little quarter basis point drawback after 525, okay? A quarter point, what difference is that going to make? Almost nothing. It at least shows change in direction. But they don't do that till late September. And then by December, maybe they go another 50 or 75 mil. That's still not even bringing us back to neutral when we probably have the biggest recession ahead of us. Why? Recessions happen every decade. Now it's been 15 years since the last recession, the longest in all of American and modern history. And I'm telling you, I bet my whole career on this, no way we have a soft landing after 15 years without a recession and all these bad debts go. We're not having to face the bad debts because the economists and Federal Reserve and central banks around the world won't let the economy take a break, which then flushes out these zombie companies and bad debts and makes us healthy again. It's a good thing to have this happen once a decade. And to think, as I said earlier, we can have booms without bust is the most naive thing in economics today. Shame on economists. And I'm not surprised because, again, I ask people, look at mainstream economists. Do any of them, show me one that looks like they've ever had or run a business. And I'll tell you, no way in hell have they ever run a business, anyone I've met. So how are you going to really understand? I ran 8 businesses. I was CEO of 8 businesses in the 80s in turnarounds, where when you can make 5 times the change. That's what I learned. I realized, oh my gosh, crises are great for a guy like me that likes to make change. I can make much more change in 6 months to a year and a half in a company when they're in a crisis than when they're just sailing along, because people are resistant to change naturally, okay? I'm a change guy. I'm a progress guy. So I love the 80s. I could turn around businesses in distress. But I saw that there's a benefit. You don't always have a boom for a reason. We don't always stay awake for a reason. There's not dark and light, there's both for a reason. Play of opposites is the very battery and energy that drives everything. And there's inflation and deflation. People, oh, we can't have more than 2% inflation. No, let the damn economy decide how much inflation. Inflation is how the economy raises a lot of money short term to invest in new technologies when the old ones are maturing and failing. Let the economy do what it does. It's called free market capitalism. It's made us the richest over the last 200 years in all of human history for 3,000 years put together, more progress. And they want to go now do top-down government capitalism. Yeah, this is ridiculous. These people ought to be put in jail. I put them in jail. This is terrible to basically take the greatest success in history and say, well, now that we're spoiled and rich, we don't want to have one of these petty recessions. Recessions are the most important thing to happen. The booms and innovations come out of it. People don't innovate when things are good. They innovate when they're getting their ass kicked. That's what I learned in the 80s, turning around failing small businesses. Leading innovators in our economy, I learned about innovation, where it comes from, and I learned that it doesn't happen without challenge. It doesn't happen when everybody's fat and happy, and we never have a recession. If you smash that down, you get a mediocre, lower innovation economy. It is the extremes of ups and downs that stimulates this stronger innovation. Everything comes from innovation, including the innovation of people having young kids pop out, okay? That's the biggest innovation people do. And we've been having less kids forever, too. And if it weren't for our strong immigration in countries like Australia, that I speak in a lot, even stronger, all developed countries are basically slowing and will slow more, as Japan has been the first to prove, and China is the first emerging country to show that slowing their population in the next 50 years is already set to go from 1.4 trillion to 780 million, cut 40% over the next 50 years. And everybody thinks China's going to grow and take over the world. They're going to be the fastest failing country like Japan on a 2-decade, 3-decade lag. They decided, oh, we got too many people, we got to restrict births. And now that they've told people they can have 2 or 3, guess what? People realize, oh my gosh, we're richer when we have 1 kid than we have 2 or 3. That the Chinese aren't having more babies even now that they've let it off, because they realize it's more economic to have 1 kid and get them into Harvard or Stanford. That's the Chinese dream. Have 1 kid, spoil the hell out of them, and get them into the best schools you can get them into. And you can't do that with 3 or 4 kids very easily, especially on their average income of $12,000 to $19,000 US. And the biggest way in history you get rich, and the problem is the developed countries have already done this, so we have to do it through technologies and productivity. The best way is just moving people from rural to urban areas where there's greater specialization of labor and much higher paying jobs. But it's specialization that makes people, the same everyday person with the same brain and intelligence, when they focus on what they do best and specialize more, becomes massively more productive. Specialization of labor, if I had to say, is the #1 principle long-term in economics. And all of this globalization and new technologies have only allowed us to leverage that more and specialize people more. And that's how we get rich. And how we don't get rich is stimulating our economy, never having to innovate, never be challenged, and encouraging people to retire. at age 62 to 65, when now somebody who makes it to that age, forget average life expectancy, 77 for men, 80, 81 for women in the US. Once you reach 65 retirement age, you're already going to live longer, because the longer you live, because a lot of those averages are having people that die all over their lifespan for accidents and all other types of reasons, and diseases and stuff. So it's just, you have to keep people innovating. And yes, we have to encourage births, and the U.S. is becoming increasingly anti-immigrant. That is our strong suit. Everybody in the world wants to move here. And I tell you, if I could live anywhere in the world, I would move from here to Australia. They have stronger, higher quality immigration, stronger growth, great climate. All of Australia is like California to me and stuff. So, and that's what happens. You need mobility, new technologies allowed to flourish, people allowed to move and migrate. The more you try to lock down nirvana and create heaven on earth, the more you kill the golden goose. And we're doing that. From my point of view, free market capitalism died in the developed world in 2008 and is yet to be revived. We will sooner or later, because if we'll get enough pain, we'll say, oh, yes, that's right. We killed free market capitalism. Maybe that's what we did wrong. That's what we've done wrong. The United States still has strong immigration and can still, not as strong as Australia, but can still grow fairly strongly if we get out of this anti-capitalism, anti-free market capitalism, and say, we can never have a recession. It's too much painful. No pain, no gain. Maybe number one principle in all of history. No pain, no gain.